Hi, good afternoon, everybody. We are doing Money Mondays. We're on the third workshop out of our four. And today we will be discussing understanding credit. I hope you guys have had a wonderful day. I'm going to pull up my screen right now and share that with you guys. Okay, so let's start. Don't mind the noise in the background. There was a fire truck, so if there's some noise, I apologize. And I do have some little fur babies that are running around. So, okay, so welcome. My name is Claudia Carrera. I am the manager of economic empowerment here at the Hispanic Federation. We're so happy that you can join us. There's my name. A few housekeeping rules before we start. Please make sure that you are muted and that, if you have any questions, you can submit them in the Q&A chat as well. Any comments or shared experiences, examples, you can feel free to share it in our chat. And just for that you guys know, our webinar is recorded. Okay, so we do have three goals with understanding credit. The first one is understand why good credit is important for your life. The second goal is to know the important concepts related to credit. And the third one is, learning strategies to build and maintain good credit. I will be turning off my video so that you guys can concentrate on the information. Okay, so credit. What is credit? So let's start by defining credit. Credit in this context is a predetermined amount of money that a financial institution is willing to loan a client in order to acquire, products or services right away and repay it in the future. What is a credit score? So usually it's a number between 300 and 850, and it tells, financial institutions that are looking into if you're, interested in getting a car or a house. It lets them know kind of how you are at managing your money and paying your bills. And so usually, like I said, these numbers will fall between 300 and 800. And, what is a good credit score, which usually refers to 700 or above. So here it kind of breaks down the chart and kind of breaking down more what is a good credit. Good credit allows people to meet, their financial goals faster. A good score is proof that you know how to use your credit responsibly and you have a history of paying back the money, you borrow on time and consistently, which is really important. And like I said before, if you apply to loans or other forms of credit or real estate, even student loans, right? So they take all this, the credit score into factor. And if you have a good credit score, I want to add that, lower interest rates help you save money in the long run. So what affects my credit score? There are 5 different factors. Payment history. So the frequency and punctuality of your payments, how good are you paying your bills on time? And then credit use, how much out of the total amount of credit that you borrowed, you're actually using. So expressed in percentages. It's good to keep it below, like try to be around 50% used. Do not use the 100%. Usually that doesn't show well on when people are looking into your credit history. And then moving on to credit history, how long have you had these credit accounts open? So usually in this case, like if you've had a credit card that you've had for 10 years and you just opened one that's like a year, they do recommend, even if you don't want to use it anymore, do not close it out. You can cut up the card as long as they're, you don't get charged a fee to do that or to consistently use it. You can cut up the card and then just keep it on there because that does affect it. So they can see your history for 10 years and know that you've been responsible. Credit mix. So having more than just one different credit. So you can have this, usually refers to the different types of accounts a person can have, from credit cards to loans to mortgages. And then new credit, which is what it sounds like, the amount of an account that you've just opened. And here, it breaks down, what we were kind of talking about and where most Americans lie, and how their use of these 5 different factors, how it affects their credit score. So usually this is the amount that people, how important it is. And payment history is huge. It's 35%. So very, very important to keep that in mind. So we have our important concepts to keep in mind when using credit. The first one is installment credit. You see here, a loan with interest made for a specific amount of money, repaid with monthly fixed payments. Usually that's like, common types of installment loans include like mortgages, car loans, personal loans. Installment loans can help you achieve, some of the most common and sought after financial goals, kind of like owning a house or a car. So it allows you, to pay back the purchase over a longer period of time. Interest rates. Sorry, I went ahead a sec. So revolving credit, my apologies. Credit that is used over and over again up to a certain limit, provided payments are made on time. So revolving credit, you can choose either to pay off the balance in full at the end of each billing cycle, or you can choose to carry that over from a balance from one month to the next. So that's why the term revolving is there. And examples of revolving credit can include like credit cards, personal lines of credit, home equity lines. Credit cards can be used for large or small expenses. Lines of credits are generally used to finance major expenses such as home remodeling or repairs. So interest rate. Interest is the money you pay back for borrowing the money. So an interest rate is a percentage of the total amount of money loaned charged by the lender for the use of its money. So for example, if you take out a $10,000 loan, depending on your credit score that we mentioned before, your interest rate can be higher or lower. So it can be, 10%, 7%, 8%. It all depends. And then what is a credit report? So that basically breaks down your history, your credit history, and kind of what you paid back, and again, like the timely basis. What does a credit report hold? So that has, it has a lot of information. So it has your personal information, can have your name, any nicknames, any other credit accounts that you have, can have your current and former addresses, your birth date, your social security number, phone numbers, credit cards, current and, historical credit accounts, the credit limit or amount, account balance, account payment history, the date the account was opened and closed, the name of the creditor, collection items, public records, foreclosures, bankruptcies, civil suits and judgments. Also, it would cover, let the institution know any overdue child support, by the state or local support agencies, child agencies, and any inquiries that you've received. And again, companies and banks and different loans have access to this when you apply. And some of the examples of the credit agencies are Equifax, Experian, and TransUnion. So these 3 are usually the ones that have all this information, and that, most banks and real estates and student loans, anything will go to, and you can access this too. So very important, how do I build and maintain my credit? So the first one is, like I mentioned before, is to keep, your old account open. Try to stay, I said 50%, but the goal is to do 30% of your credit limit. Don't go over that. I know things happen, especially now during the pandemic, life happens, and you're kind of put into difficult situations. So the goal is to stay, 30% or under, at least stay under 50 if you can. And again, make your payments on time. It's incredibly important. And once again, check your credit report. It's very important to get into the habit of checking, how, what's it called? How if you're not used to kind of checking that and you're just getting into your finances again and trying to like revamp that so that it works for you, it's important for you to, get into the habit of checking your credit report often. You can catch mistakes. It's not perfect. Sometimes, they might charge something to you saying that it was delayed and it wasn't. And you can kind of mediate that with the credit agencies and the bank or whoever made the mistake, when you were paying your bills. And then again, keeping a mixture of credit types, not just sticking to one, like having a whole bunch of debt and credit cards or credit and credit cards. And it's important to differentiate, between good debt and bad debt. And what do I mean by good debt? Good debt is defined as, money owed for things that can help build wealth or, increase income over time, such as student loans, mortgages, or business loan. Bad debt refers to things like credit cards or other consumer debt that do little to improve your financial outcome. Important to keep kind of that in mind. And then, for more information, we do have this very valuable resource at the annual credit report that you can check. It used to be that you could only check once a year, but now because of the pandemic, you can actually check once a week without being penalized. So that's great. And I think that's a great, website you should visit and get into the habit of checking on a daily basis. So food for thought, kind of like something to think on. Again, we all grew up differently. We all grew up in households that have managed money differently. Maybe we didn't know, maybe we weren't taught. So it's very important to keep all that in mind. But as I mentioned before, keep in mind these habits and the habits take time to form. And that's important to kind of invest the time to be able to do that. And again, it's just developing like these strategies with everything that we've kind of talked about before, like savings, your bank accounts, and your credit, kind of tying it into one and being able to check it. Because building that healthy habit of checking helps you kind of catch mistakes and be able to plan, accordingly to be able to achieve your future financial goals, which is really important. So our next one, our last workshop for Money Mondays will be April 25th, how to avoid fraud and scams. I hope you can join us. And again, if you want to stay in the loop, if you want to connect with us and sign up for our newsletter, we have a lot of great people working at the Hispanic Federation. Coworkers are amazing that they all work in, different departments, not just ours, like economic empowerment. So if you want to check them out, please visit our website, sign up for our newsletter, and get more information about immigration, environment, civic engagement, health, anything that you need. You can visit our website or text us at the number you see there, which is 40649. We also have assistance with health insurance. You can call that number or email. They would be more than happy to help if you have questions with that. We do have a survey, so we do ask that you kind of, take the time to take the survey, let us know how we're doing. Again, these workshops are just snippets, short, kind of educational, informational workshops, but we are excited to kind of expand it more. Let us know if there's something we can improve on, explain more, or if there's a topic that you would love to cover and love to see more, we would be more than happy to kind of help facilitate that and create that for you. Okay, so I'm going to take the time for some questions, and then thank you so much for joining. I hope that you can feel free to reach out to me. We will be sending a one-pager with all this information, and this will be up live on YouTube so that you can see it. Thank you so much for joining. Have a great afternoon.